Warren Buffett is not only among the world's wealthiest people, he is also likely the billionaire with the lowest expenses, and he has generally always been this way. He typically spends $3.17 at McDonald's for breakfast. He will select the less expensive choice if the market is weak. He still resides in the same old home he bought more than 60 years ago for just $31,500. He once had a vehicle with a license plate "Thrifty" on it too. However, at the same time, Warren Buffett's corporation spent $6.7 million on a private jet in 1989. He invested in a Dale Carnegie speaking course in 1952, which proved costly in terms of opportunity cost, but we'll get to that in a moment. Buffett also spent 6% of his net worth on a wedding ring in 1952. He even refers to the wedding ring as his greatest investment to date. In any case, the Oracle of Omaha says that an investor needs to be ready to pay up sometimes, even if it's not in the stock market. Therefore, it begs the question of how thrifty an investor should be. In this video, we'll break up the subject of deferred gratification in 3 separate takeaways. Number 1. Why is frugality important? First of all, let's talk about why being thrifty is crucial for investors. According to Warren Buffett, investment is as follows. Investing is giving up consumption now to enable consumption of more at a later time. Buffett has always believed that every dollar today may become worth $10 tomorrow, since he saw the benefits of compounding early on. That has shown to be a reasonable assumption in Buffett's case, and when you consider the math involved, costs can add up very rapidly. What would the price of the Dale Carnegie course, which he purchased at 22, be now, given the stock market returns that Buffett had experienced over the years? If he had put the cash to work, it would be worth $291 million today. Depending on how you look at it, this is compound interest at its best or worst. Even if it might be very optimistic to think that you and I could ever see returns comparable to those of the Oracle of Omaha, let's assume that you can achieve financial success on par with that of a young Warren Buffett. So what is the opportunity cost of buying a car in your 20s? Here, we're not talking about a fancy car. Instead, I'm talking about the least expensive model. At 30, you could have bought a far finer car if you had invested your money. You could have purchased a whole house at age 40. Yes, in cash. And you could have achieved financial independence by the time you turned 50. But of course, you bought that car. Warren Buffett's first rule of investing is never lose money. His second rule is to never forget the first rule. Overspending is a guaranteed way of breaking this rule, without even making a mistake in the stock market. Also, it's a guaranteed way of delaying the date at which you will reach financial freedom. Number 2, how frugal should you be? Compound interest and all of its glories are why it's wise to practice frugal living. Most investors know this, which is why it's almost encouraged in our circles to brag about having a high savings rate. But how frugal should an investor be? What is a prudent savings rate? 10% of your earnings? 30%? More? This boils down to an individual's preference. But allow me to assist you in analyzing your own circumstances by providing you with a few general guidelines from Warren Buffett. The first generalization, which was alluded to earlier, is that there is a greater financial incentive to be thrifty while young. One of the main things that led to Warren Buffett's wealth as an investor is that he started young. He had made and saved a lot of money by the time he was 11 years old and bought his first stock. Although yesterday was the greatest day to begin, today is still a good day. So try not to get discouraged. Second, how much you value a particular activity is a personal choice. In the video intro, it was revealed that Buffett spent 6% of his net worth in 1952 on a wedding ring, calling it the best investment of his life. And you are aware of several wise investments that this man has made. Also, Buffett would never tell you to be defensive or cheap when making purchases that you think will make you more money in the future. Like he did when he invested the money, he would have spent $291 million today instead of spending 1% of his net worth on a Dale Carnegie speaking course in 1952. Warren Buffett once had terrible stage fright, which might be hard to understand now. He opted to pay up to help him mature as a person after realizing that this would set him back significantly in the pursuit of riches. The $100 he spent on the course ranks high on his all-time best investments. Number 3. If I'm allowed to speculate a little bit myself, I think Buffett's ability to remain frugal, even with the enormous sums of money he has today, comes down to 2 things. His perception of his self-worth is not generated through the money-consuming activity, and he does not have any expensive hobbies. If you can combine those 2 for yourself, you'll have a much easier time reaching financial freedom. For us as investors, $1 today is worth a bunch of dollars in a few years. save more while you're young, and find great investments in the stock market. However, some activities outside the market are too valuable to be cheap with. So, stay frugal by trying to figure out a way to feed your ego without flashing expensive items and avoid expensive hobbies. Thanks for making it to the end of this video. We appreciate your time, so hit us with a like, a subscribe, and hit that bell for a notification the next time we put out a video. We'll see you in the next one.